Hello, greetings, and welcome to Dividend Blasters. This is our 19th video for the channel. The topic today is I'm sharing with you 8 investments that are going ex-dividend in the next month. So through my research, there's over 346 investments that are going to go ex-dividend. I've identified 8 for you to consider. Disclaimer, I'm not a financial advisor. The purpose of this video is for information and education. It reflects my own personal opinions. So please do your own research and consult a financial advisor prior to making financial decisions. Having said that, I've been an independent investor for 30 years. I have invested in stocks, ETFs, real estate, and more recently, precious metals, physical gold and silver, and a little bit of cryptocurrency. But my passion is investing in cash generating investments. I love cash flow, and I want to share my passion with you, and that's the purpose of this. Now, having said that, I tell you what, I don't make any major financial or investment decisions until I pick up the phone and I talk to my advisor. My advisor is a licensed professional, and I have had a relationship with him for the better part of 20 years. They are cued in and they offer me their unvarnished opinion. So I urge you to do your research, your due diligence, and pick up that phone. It's a prudent thing to do. Okay, let's start the countdown. First one is Altria Group, ticker symbol MO. This is a big tobacco company. They also own Budweiser. I have several shares of this. This is a wonderful company. It goes for $46 a share. They have a market cap a little under $81 billion. I like that PE ratio. It's a little bit under 9. The earnings per share of 5 is more than sufficient to cover that dividend per share payout. The beta is very safe and decent. I like it. You are talking about something well under the S&P 500. And I really love that dividend yield of 8.3%. It's killing their competitors by almost 4 times. And you know what I love? I love that dividend growth rate, 7.7%. So, we talk about the hurdle, the 10% hurdle, our little rule of thumb. They're killing it. They are over 16%. And some folks have asked me, they said, hey, is this a dividend yield investment or a dividend growth investment? I can't give you an answer because I think it's a little of both. And that's what I truly like about it. The payout ratio, it's a little bit high. It does breach my 20 to 60 rule. But you know what? They've been getting it done for 53 consecutive years. They're a dividend king in my book, killing their competitors, only 2 years. So I love it. They're going ex-dividend in 3 days. So if you want to get in and you're not in, get your buy order in the next couple days. Next one, ConocoPhillips. This is a wonderful stock. It's a gas and oil company. They're trading at $96 a share. Market cap, $115. The PE is very reasonable. It's about 8.5. Earnings per share is a massive 11.10. More than enough to cover that dividend payout of $5.34. The beta is a little bit high compared to the S&P 500, but in this sector, that's to be expected. Things are a little bit volatile in the oil and gas industry, as you know. Anyway, let's take a look at that dividend growth rate. I get excited when I look at that dividend growth rate of 12.43%. That is just, they're killing it. Taken together with a yield, they're over 18%. Now, I have an asterisk next to the dividend yield. I have 5.66%. Some of the reporting services and the resources out there have a dividend yield for ConocoPhillips of in the 2.5% range. But they typically don't always include special dividends. So ConocoPhillips has paid in the last 2 years 4 quarterly dividend payments and 4 special dividend payments. So each of the last 2 years, they paid 8 dividend payments each year. So that's why I have that higher dividend yield. I think it's a more accurate reflection of where they are and paying out dividends. And This year in Q1, they have paid out one quarterly and one special dividend already. So I'm looking forward to see what they're going to do here for Q2. We will see, but I'm optimistic. I like that dividend payout ratio of 33%, well within that 20 to 60% range. The recent growth streak's only 2 years. They had a blip a couple years ago, but they're back on track. And if you look at their longer history, they've been paying out dividends for many, many, many years. They are going ex-dividend on the 28th, so you got about a week. Get your buy order in if you're interested, at least the day before. Next one. U.S. Bancorp. Now, you might be a little skittish about going into bank stock with some of the bank failures that have been going on. I totally get that. But U.S. Bancorp, I think, is a little bit different. It is a regional bank, okay? But it is a very big regional bank. They have a market cap of $50 billion, and they are considered a very good, very, very good, safe regional bank. I did paste a couple of press releases. Actually, they're not press releases. They're articles and analyses in the press that basically say this is a great stock. This stock is being upgraded from neutral to buy. So they're there, and you can look them up and do the research. They're trading at $34. I think that's a pretty reasonable price. And I like that PE ratio 6.5, and the earnings per share of 5 is more than sufficient to cover that dividend of $1.92. You take a look at that dividend yield and you take a look at that dividend growth rate, and you're over 16%. It's killing the hurdle, and I really, really appreciate that double-digit dividend growth rate. The payout ratio is in that safe zone of 20 to 60%, and they've been paying an increasing dividend for 12 consecutive years. Gotta love it. They're going ex-dividend on the 30th, so you got about 9 days to get your buy order in if you're interested. Next one. Who doesn't love Realty Income? Ticker symbol O. I love it. I have several shares of it, trading a little under $62. Their market cap is $40 billion, and the price over funds from operations is a little under 15. Funds from operations is 4.11. It is more than enough to cover the $3.06 dividend payout. But what I really love about this company is that they are a triple lease threat. Look that up. They have all the advantages with their lessees, and they have a huge portfolio of lease agreements going 10, 15, 20 years. So those lease payments are going to keep coming in for years and years and years. And as they do, that means those dividend payments are going to keep coming in our way. Remember, they don't pay federal income tax because they're a REIT. As long as they pay out 90% of their profits in dividends, they don't pay. So they are committed to paying out those dividends. They are the monthly dividend company, as you know. And they've been paying out increasing dividends for 26 years. They're a dividend aristocrat. They're going ex-dividend on March 31st. Next one, American Express. I've been a card holder for 35 years, but I recently bought in to American Express stock. I figure if Warren Buffett has it, it can't be a bad investment. And I've had Visa for a long time, but I do like American Express. They're trading a little under 159, and their market cap is a pretty sizable 116 billion. PE ratio is 14. Earnings per share are a massive 11.15, more than 5 times the size of the dividend per share payout. The betas are pretty decent, less than their competitors. I do love that dividend growth rate. Now, the yield is a little bit anemic, okay? But they're making up for it in that growth rate. And that tells me that they are committed to paying an increasing dividend. Now, their current growth streak is only a year. But American Express is a marquee brand. So I am going to say yes. And I like that payout ratio of 21%. It's a very safe payout ratio. They're going ex-dividend on April 5th. So you got a little bit of time. Get your buy order in if you're interested before April 5th. Next one. Verizon. I look at Verizon and I have several shares. I am surprised that the price is still so low. I like this stock. And who doesn't have a Verizon product or service, whether it's their cell phone or it's their cable or whatever? I've got all of it. I love that market cap of 154. They're a big company. PE ratio is small. It's reasonable, 7.85. Earnings per share is almost double the dividend per share. It's 469. You got to love that beta. It is very low. I feel very safe knowing that the beta is 0.3. This to me is more of a dividend yield stock than a dividend growth stock. So you're going to get a consistent dividend payment each and every quarter. 7% yield is pretty decent. The growth rate is small, but and normally I'd be a little bit skittish about that, but they've been getting it done for 18 consecutive years. Better than their competitors. They're going ex-dividend April 6th. So if you're interested, get your buy order in before that. AbbVie. Now, this is a massive global pharmaceutical giant, ticker symbol ABBV. They're selling it at 156. This is a big company, market cap almost 273 billion. PE ratio a little under 14. Earnings per share 1108. That is almost double the dividend per share. And that's probably why they can afford that big dividend, which is a very decent payout in my judgment. I mean, 3.84% yield for a company of this size, it's very impressive. But what I really like is that dividend growth rate of 16.92%. They're killing it. You look at our rule of thumb, the 10% hurdle, this is over 20%. That gets me very excited. And I love that dividend payout ratio of 41%. That tells me it's a very safe payment. They can make it and maintain it at a growing rate very easily. Now, I have the dividend growth streak of 51 years. They haven't been a company independently for 51 years. They used to be part of Abbott Laboratories, which has been around forever. So I have that in here because I want to give them credit because I think they deserve it. So that's where I am on this. I have several shares of AbbVie, and I'm very pleased with it, and it's building my dividend snowball in my portfolio. They're going ex-dividend April 13th, so you got a little bit of time. Payout will be mid-May. Next one, EOG Resources. Well, we have another oil and gas stock. They're trading at $105, and they're a little bit smaller than the ConocoPhillips and the Chevron certainly, but they're not bad. 60 billion is a good sized company in that industry. PE ratio of 8. That is reasonable, and I like the earnings per share of 12.83. It's almost 4 times the size of the dividend per share of 330. Now you look at the beta, it's a little bit higher, at least the 60-month beta. It's come down in the last 24 months. But remember, that sector, things are a little bit more volatile. We have seen the price of crude oil come down in the last week. So that's something to think about. But one thing you want to keep in mind is with these oil companies, they do tend to pay special dividends. So keep your eyes open. You may get more than just a quarterly dividend. So anyway, what I do love about this company is the dividend yield is decent. It's less than their sector competitors, but I love that dividend growth rate. They're absolutely killing it. And I would say that payout ratio is very safe. So 22%, that tells me they're going to do it. They're going to meet it. And they got a current growth streak of 5 years. They're going ex-dividend on April 13th, 2 days before tax day. So get your buy order, and if you're interested, before that, and you'll get your dividend before the end of April. And that is all I have. Folks, I hope you found this informative and useful. These are my recommendations. I would ask you to kindly give this video a like and subscribe to our channel. It would be a great help to this channel. And share the video with a friend or a family member. And I wish you the very best until the next video. Good day and God bless.